Trucking and fleet insurance is a specialized form of commercial insurance designed to protect businesses that operate trucks, vans, service vehicles, or larger groups of vehicles as part of their operations. It addresses the unique risks that come with transporting goods, moving equipment, and making deliveries, and keeping up with multiple drivers on the road every day. While ordinary auto insurance may be enough for a personal car, it is not built for legal exposure, financial risk, and the operational complexities that come with a trucking company or a business fleet. Trucking and fleet insurance exists because companies that depend on vehicles face losses that can be much larger, much more frequent, and much more disruptive than what most personal drivers experience. At its core, trucking and fleet insurance helps a business survive the financial consequences of accidents, injuries, vehicle damage, cargo loss, lawsuits, and other events connected to commercial transportation. A trucking company may have tractors, trailers, box trucks, or straight trucks operating across states, or even the entire country. A fleet operator may run delivery vans, construction trucks, utility vehicles, or service cars that are constantly in motion for business purposes. Every mile creates exposure. A collision can injure people, damage property, interrupt shipments, delay customer commitments, and trigger legal claims against both the driver and the company. Insurance is meant to absorb much of that financial shock so the business does not collapse under the weight of one serious event. One of the most important parts of trucking and fleet insurance is liability coverage. If a company vehicle causes an accident and someone else is injured or their property is damaged, liability insurance can help pay for those losses. In the trucking world, liability exposure can be especially severe because commercial vehicles are larger, heavier, and capable of causing major harm in a crash. A tractor trailer colliding with a passenger vehicle can lead to catastrophic injuries, extensive property damage, and costly litigation. Even a smaller fleet vehicle, such as a delivery van, can create significant liability if it causes an accident in a busy area. Liability coverage is therefore the foundation of most trucking and fleet policies. It protects the company against claims for bodily injury, property damage, legal defense, settlements, and judgment up to the policy limits. Physical damage coverage is another major component. This part of the insurance helps pay to repair or replace the insured truck or fleet vehicle if it is damaged by a covered event. Collision coverage applies when the vehicle is damaged in an accident, while comprehensive coverage generally applies to losses such as theft, vandalism, fire, hail, or certain other non-collision events. For a business that depends on vehicles to generate revenue, the loss of one truck can be a major setback. If a truck is badly damaged, the business may miss loads, lose contracts, or fall behind on service obligations. Physical damage coverage helps reduce the direct cost of repair or replacement, but it also supports the larger goal of keeping the operation moving. In trucking, cargo insurance is often just as important as the truck itself. A truck may arrive safely, but if the goods being transported are damaged, stolen, contaminated, or lost, the business may still face serious claim. Cargo coverage helps protect against that kind of exposure. This is especially important for the hire carrier who transport goods belonging to others. If a refrigerated load spills, valuable merchandise is stolen from a trailer, or products are damaged during transit, cargo insurance may be responsible depending on the cause of loss and the policy terms. This type of protection matters because trucking companies are not only moving vehicles down the road, they're also responsible for the value of what's in those vehicles. Another important element is trailer coverage. In many trucking operations, the trailer may be owned by the motor carrier, leased from another party, or used under interchange agreement. Insurance may need to address damage to the owner trailers as well as the liability related to non-owner trailers in the company's care. Trailer interchange coverage can be particularly important when a trucking company is using trailers it does not own under a formal arrangement. Without the right policy language, a company may discover after a loss that the trailer in its possession is not properly covered. Trucking and fleet insurance can also include uninsured or underinsured motorist coverage, medical payments, and other optional protections. Uninsured or underinsured motorists can help when one of those companies' vehicles is hit by a driver who lacks enough insurance to pay for the damage they caused. Medical payments coverage may help with immediate medical expenses for occupants of the insured vehicle after the accident. Some policies can be tailored with additional endorsements for towing, rental reimbursement, downtime-related concerns, and specialized equipment mounted on the vehicles. The exact structure depends on the nature of the business, the kinds of vehicles involved, and how the fleet is used day to day. A major difference between ordinary business, auto insurance, and trucking insurance is the regulatory environment. Trucking companies, especially those involved in interstate hauling, may be subject to federal and state insurance requirements. Certain minimum liabilities may be applied depending on the type of freight being hauled and where the company operates. This makes trucking insurance not only a matter of financial prudence, but it's also one of legal compliance. A carrier may not need proof of coverage to obtain operating authority, satisfy contracts, work with brokers, or maintain relationships with shippers. Without proper insurance, a trucking business may not be able to operate legally or compete for loads. Fleet insurance, while related, often refers more broadly to businesses that insure multiple vehicles under one coordinated policy. This can include trucking companies, but also can include contractors, delivery businesses, utility providers, municipalities, and service companies with a group of vehicles. The advantage of fleet insurance is that it allows a company to manage coverage more efficiently across many vehicles instead of treating each one as an isolated policy. This often simplifies administration, help with consistency of coverage, and may provide pricing benefits when compared with insuring each vehicle separately. It also allows the insurer to evaluate the operation as a whole, include driver management, maintenance practices, safety culture, and claims history. Driver risk is one of the biggest factors in trucking and fleet insurance. Insurers pay close attention to who is behind the wheel, and the driver's experience, history, and behavior have a direct effect on the likelihood of accidents. A company with well-trained drivers, strong hiring standards, regular safety reviews, and clear disciplinary policies will often present a more favorable risk profile than a company with frequent violations, poor record keeping, or high driver turnover. In fleet operations, one reckless driver can create losses that affect the insurance cost of the entire company. That is why many businesses invest heavily in driver screening, training, telematics, dash cameras, and safety programs. Insurance is meant to respond after a loss, but insurers also want evidence that the company is doing real work to prevent losses in the first place. Maintenance is another major issue. Truck and fleet vehicles experience wear and tear quickly, especially when they're used intensively. Poor brakes, worn tires, lighting failures, steering issues, and neglect inspections can contribute to accidents and increase claim severity. Insurers often overlook favorability on businesses that keep strong maintenance logs, follow preventive service schedules, and remove unsafe vehicles from operation promptly. A fleet that is well maintained is not only safer on the road, but also less likely to suffer breakdowns that interrupt operations and cause indirect losses. Premiums for trucking and fleet insurance are shaped by many variables. The insurance may consider the size of the fleet and type of vehicles, the nature of the cargo, the geographic territory, annual mileage, driver records, safety controls, claim history, and the limits and deductibles selected. A local plumbing company with service vans presents a different risk from a long-haul trucking company transporting refrigerated goods across multiple states. A business hauling hazardous material faces a different level of exposure from one moving package retail products. Urban delivery routes can create different risk from rural highway mileage. Because the range of operation is so broad, trucking and fleet insurance is usually highly customized rather than a one-size-fits-all. It's also important to understand that trucking and fleet insurance does not cover every possible loss. Mechanical breakdown is generally not the same as accidental damage. Certain cargo types may require special underwriting. Employee injuries may fall under workers' comp rather than auto coverage. Pollution events, contractual disputes, and intentional wrongdoing may be excluded or limited. For this reason, trucking and fleet insurance is often part of a wider risk management program that may also include general liability, workers' compensation, umbrella liability, property insurance, inland marine coverage, and employment-related protection. In practical terms, trucking and fleet insurance is about as much more than repairing damaged vehicles. It's about preserving business continuity in an industry where delays, accidents, and liability claims can quickly become existential threats. A truck that is down for repairs may mean missed revenue. A serious claim may threaten contracts and reputation. A lawsuit can consume management time, drain resources, and create uncertainty for months or years. Insurance cannot remove every challenge, but it gives the business a financial framework for dealing with those challenges and continuing to operate. The real value of trucking and fleet insurance lies in stability. The business that relies on vehicles are exposed to constant movement, constant uncertainty, and constant legal responsibilities. Whether the operation involves a handful of vans or a larger group of heavy trucks, the risk is substantial because the road is unpredictable and the consequences of a mistake can be enormous. Trucking and fleet insurance helps protect vehicles, drivers, cargo, and the business itself. It supports compliance, helps manage claims, and gives owners a way to keep serving customers after something goes wrong. In the end, trucking and fleet insurance is a practical safeguard for businesses whose success depends on transportation. It is designed for the realities of commercial driving, where multiple vehicles, multiple drivers, tight schedules, and high-value exposures create a level of risk far beyond ordinary auto use. By covering liability, physical damage, cargo, and related transportation risk, it helps businesses stay resilient in an industry where movement is constant and uncertainty is part of the job every single day.